Hello, my name is Steve Bigelow with the Candlestick Forum. We've got some very strong sell signals in a market direction that is telling us we're still heading down. So when you put these two factors together, you dramatically improve the probabilities of being in correct trades. The Dow, as we can see, ever since it failed up here at the 50, they haven't been able to close it above the T-line. Now, this is very important because you could see what happened during the week. There was a strong bullish day, but the one final factor that never got confirmed was the fact that there was a reversal signal because, as you can see, they didn't close the Dow above the T-line. Even on Friday, when it traded positive most of the day, looked like there could be a reversal, but they failed to close it above the T-line, still implying that this downward trend is still in progress. Same scenario here. The T-line rule is just very effective for telling you which direction the overall market direction is moving. You can see that Nasdaq opened positive on, I guess it was positive words coming from Putin that they might have an agreement, but as you can see, that faded away during the day. This is the type of thing that allows investors from getting whipsawed in and out of positions. If you've been short, you can see that it's been a good market trend to remain short. And again, that final criteria, they couldn't close above the T-line. So anytime we see a strong sell signal, our recommendation to be short on CFLT was based upon, look at your bearish best friend. That's a doji followed by a gap down. Not only followed by a gap down, but a gap down through the 50, but most importantly through the T-line. We could just still imply this downtrend remained in progress, because notice how when they started trading positive, the dojis illustrated that it wasn't very compelling positive trading, very indecisive. And then the failure at the T-line said there was more downside. That trend continues to head down. So the rhetorical question, how long do you stay short? You stay short until you see a buy signal and a close back up above the T-line. So knowing that we're in a downward market, we want to find the strongest sectors to the downside. Right now, the software sector and the aluminum sector are both sectors you could probably short. CENX, just one of a few aluminum stocks that you could be shorting with the expectation they might be coming right back down to this level, the 200-day moving average. Same scenario on the software stocks. Net, for example, had a shooting star hanging man signal in the overbought area, and they confirmed it to the downside. Not only confirmed the failure or the confirmation of the hanging man signal, but they also closed back below the T-line, which told us the bulls were not in control. So here's the visual elements that we have as far as a benefit with candlestick analysis. Shooting star signal, hanging man, both potential sell signals. Stochastics rolling over on the sell-off and close below the T-line. What other visual element can we add to this, the analysis of this trend? Look where it failed, right at the same level it failed before. So you have a double top, and they haven't been able to close above the T-line. Wave one, wave two of a J-hook pattern, wave three taking you down a lot further. This is very relevant if you're trading options, or I would say more irrelevant if you're trading options and stock, because it allows you to put on high profit trade setups with much more confidence. Now I'm going to flip here and say we're going to be doing a 2-day training. We call this our basic comprehensive training on candlestick analysis. That's in a couple of weeks from now, March 26th and 27th. The reason we're doing it is This is kind of your bread and butter, your ABCs of candlestick analysis. It allows you to not only recognize the signals and patterns that tell you whether you're in a bullish mode or a bearish mode with much greater probabilities, but you also learn the psychology that created those signals. That combination is a very, very strong factor for learning what moves prices. And with that information, you have the same degree of analytical ability as somebody that's been trading in the market for 40 or 50 years. So that type of thing tells us when we see sell signals, a close below the T-line, a bearish J-hook pattern. Our recommendation to go short on Etsy on Friday was, if it opened lower, this bearish J-hook pattern was going to be heading in the right direction. So when you add all that together, you're in a downtrend because of the evening star signal. You've closed below the T-line. You're doing a bearish J-hook pattern and your stochastics are heading down. This puts everything in your favor that you're in a downward direction. This is what makes putting on positions, whether you're buying stocks or puts, or I'm sorry, if you're shorting stocks or puts, or shorting stocks or buying puts, it puts you in the right direction with a high degree of probability. Weibo was identified in our chat room during the day. Look at the bearish kicker signal. This is a very strong piece of evidence that the bears are not only in control, but in very strong control. If you're seeing a bullish trade, you're still below the T-line, and the next day they gap it down below the previous day's open, it's just a logical conclusion that the bears not only are in control, but they're in there with great strength, creating a very good bearish pattern. Same thing here on YUMC. Right here at the T-line. If this is a reversal, what do we want to see for bullish confirmation? A close above the T-line. The fact that they gapped it down told you not only were they not going up, but they were probably heading down with very strong magnitude of strength. This is not rocket science. This is what I keep reiterating to people. This is just common sense analysis put into graphic depictions that the Japanese rice traders have provided for us for the last few hundred years. The evidence of what normally happens in human nature. Now, it works both on the bearish side as well as the bullish side. We recommended going long on Dave, because that's your inverted hammer signal with bullish confirmation. Knowing the probabilities of a candlestick reversal signal, again, gives you that much more confidence that you could be trading in that direction, in spite of what the overall market direction is telling you. The inverted hammer signal, which is one of the signals we're going to go through on the 26th and 27th, is a signal that doesn't occur quite as often as the rest of the 12 major signals, but the probabilities are 95% or greater that if you see a positive confirmation, you're going to be in an uptrend. Now, this statistic right here is nothing that was computer generated. This is just the statistic I've been able to assess from this signal and using it every possible time I see it with that type of result. That 95% or your probabilities, again, are 95% or greater that you're going to be in an uptrend. Now, this is basically taking the information that the Japanese rice traders have provided for us and even putting our own statistical results to it, knowing we don't have to know what's going on in this company or what they do. All we have to know is that they are buying this stock. Same scenario here. This is where the benefits of knowing what the signals are telling you allow you to take advantage of information that is showing that there's a major change of investor sentiment. Now, I have no idea or had no idea what MULN did, but you can see the best friend alert. We call this a rare best friend alert, rare standing for research analysis, reverse engineering. Meaning, when we see this, we can go back and see what was the news that created this, or what is this stock or what this company doing that all of a sudden there's a big interest in it. Well, in this case, this company has also developed a solid state lithium battery, which obviously is going to be a great interest to the electric vehicle sector. Well, you can see the next day, if you bought on this day, you were back out on this day, because that told you it failed. However, this was still the alert telling you there was new interest coming into this downtrending stock. Over the next few days, bullish engulfing signal. Friday, bullish engulfing signal. Where was this all occurring? Right here at the T-line. That allows you to kind of keep a lot closer contact as far as if there's any news. But why is this being bought? We have no idea. All we know is that the candlestick signals provide the information telling you what's going on between the bulls and the bears, putting you in a high probability situation that you're in an uptrend. Now, this came from $15 a share not too many months ago. Could it get back to that level? Have no idea. The only thing that we're looking at right now is the probabilities are telling us the buyers are stepping back in, that we can be in the right place at the right time. This is the type of information that we're going to go through piecemeal on March 26th and 27th. You're going to be learning the 12 major signals, the high profit candlestick patterns, and then the combination of those signals and patterns, what we call the top rank signals and patterns. The high probabilities are increasing your probabilities of being in a good trade by the good entry points, when to take profits, how to use candlestick signals and gaps that greatly enhance your profitability, where to put the logical stops, and the simple scanning techniques that in less than 20 minutes each afternoon, you're going to be able to locate the best possible trades, again, based upon the direction of the market each afternoon. But the most important aspect is not just learning the mechanics, but it's the psychology. When you have that combination of being able to see what's happening in a chart pattern and knowing what the investor sentiment is, that puts you in a very powerful trading strategy that most investors do not ever get taught. The reason that candlesticks are so effective is they are the information that's telling you what everybody else's decisions are, not what you think your decisions should be. You're looking to see what everybody else is doing. So with that, come join us. That'll be it. We'll see you in the chat rooms.